Again. Good morning, everyone, and you're welcome to United Capital Investments webinar this Saturday morning. My name is Louis Ogenekume Akovesu. I am a strategy and technical analyst at United Capital, our Abuja office, which is in our northern region, and I would be the moderator for today's session. I earlier said that we should give a couple of minutes for other people to join in. So maybe just in another minute or two, then we're good to start the webinar. Thank you. All right. I think we can start now, just so that, okay, maybe while we're waiting for just a couple of other people, for those that are here, let's just do a brief rundown of who we are and then what we stand for. So once again, you're welcome to United Capital PLC Investment webinar. And as I earlier said, my name is Louis. So United Capital, just a brief introduction of what United Capital is. We're an investment bank and a financial services group. And we have 5 major businesses that we operate under the group. So we have our asset management business, we have our securities trading business, we have our trusteeship business, consumer finance or digital bank, and our wealth management business. So we are currently located in about 10, 11 different locations across Nigeria and Ghana, and physical locations across Nigeria and Ghana. And this actual webinar is hosted by one of our locations in the Abuja office, which is in the northern region of United Capital. So United Capital is actually a quoted investment banking firm. And quite interesting that we're going to be talking about dividends today, because that will give us a little bit of insight as to what it means to be a quoted investment banking firm. But this is also one of the strong points that makes us the foremost leading investment banking firm in Nigeria. And we're quoted on Nigeria Stock Exchange. And we are also a leading fund manager with over 600 billion in assets under management. So I think enough about United Capital being said. As one of the leading investment companies, let's turn it over to our participants, our panelists today. I can see that quite a number of us have joined, so we'll go straight into it. Just before we do that, let's just have some housekeeping rules. So please note that this call is actually being recorded, and at this time, participants are only on listening mode, so we can only listen for the time being. So if you're joining us via Zoom, please feel free to share your question via the Q&A section. It should be somewhere in your chat box, at the bottom of your screen. And then once it's time for the Q&A segment, we'll be more than happy to take some of those questions. So let's get straight into it. Today, we'll be discussing about how to profit from dividend declaration season. And our speakers today are 2 very well-vested individuals in this particular field. So I'm sure they are going to be giving us some very, very invaluable gems as to how to profit in this particular season. So let's quickly meet them. The first speaker is Abidin Alade. He's the head trader at United Capital Securities. And our second speaker is Martha Ehizele. She's digital channels lead at United Capital Securities. Martha, how are you doing today?
Hi, Louis. I'm very fine, fantastic. So happy to talking about money. My best time.
Fantastic. Saturday mornings are for money talk. That's great.
I know.
Abidin, how are you doing today?
Very well, Louis. Thanks for having me on this webinar today. It should be a very, very interesting one, given that we are almost approaching the earnings season, where investors go home with lots of dividend from a host of listed company on the floor of the exchange. I also like to say a very big thank you to everyone on the call. We don't take your interest in United Capital for granted. I'm sure we'll all enjoy the session. Thank you, Louis.
Fantastic. Abidin is whetting our appetite already. So that works just fine. Thank you so much, Martha. Thank you, Abidin. And thank you to everyone who has joined on the call. So let's get straight into it. So for those of us in the room who may not be familiar with the term dividends, because you know the topic, how to profit from dividend declaration, the key word there is dividends, right? So for those of us who are in the room, who are on the Zoom chat, who are listening via all our other channels, what exactly are dividends, right? Are there types of dividends? Is dividend something I can go to a store and buy off a shelf? Is dividend something that when I listen to on the radio, they call it out to me, I plug it on my phone? Or what exactly, are dividends? And what are the types of dividends that, exist as well? So Martha, I don't know if you can just enlighten us on this.
Louis, is this a case of ladies first? Is that why you went with me first? Well, thank you so much. I'm glad to be opening the floor. So I'll just start by saying that whatever we do in life, there's no activity without a ripple effect. You always get into a thing because there's something to get from it, right? So dividends, the whole point of dividend is that as shareholders, you are a shareholder of a company, right? You give this company a certain amount of money. You have your money is part of their operating capital. And at the end of the year or a certain period, these companies will declare the profit that they had made off running their business because they had a capital that they were working on. So dividends basically is a company sharing profits that was made from a specific period. Let's say sometimes it's a financial year. So let's say that a company is operating on 100 billion. And in 2022, they made 30 million. So that 30 million is what the company says that this is the profit we made off our capital. So now we're going to share this profit amongst our shareholders, right? And there's something called dividend yield. Not all companies pay dividends, right? But dividend yield helps you track the consistency, helps you track the strength of the profitability of a company. I give an example. Currently, Zenith Bank's dividend yield is at 12 points. UBA is at 11 points. Seplat is at 7.7. So what does dividend yield mean? Dividend yield means that it's a percentage of the amount of money you pay as dividends in relation to the current stock price of your shares. So let's assume my shares let's assume Martha has a company and Martha has the shares. I have a company and you're my shareholders, right? And 1 unit of my share goes at, my shares cannot be cheap, goes at 2,000 naira, right? Well, 2,000 compared to the market, right? And my dividend payment is 200 naira. So it's 200 naira divided by 2,000 times 1,000. Times 100, I mean, that's the dividend yield. What that goes to show you is that when you say a company's dividend yield is at 12 points, compare it to when you fix your money or save your money in the bank and you get returns of like 1 point, 2 point something percent. You are getting up to over 10% on this stock. And that's not the only way you're making money off the stock. So dividend yield goes a long way to show the strength of a company, the strength of the dividends that you get, and how profitable that company is. The types of dividends are cash dividends, stock dividends, script dividends, and liquidating dividends. Since we're trying to be practical and we're here to take you on a very realistic journey, I'll stick to the ones that are common in our market, and that's cash and stock. Cash dividends, as it sounds, is money, the money that the company gives you. So we've made profit. We're going to give you this money into your bank account as part of our profit, right? But for stock dividends is okay. We're going to give you an extra unit, so you're not buying. We're just saying that you have this amount of units. We're going to give you 10 units, or we're going to give you 100 units, or we're going to give you extra units, which you can add to your current portfolio. I'll stop there, Louis. I hope that I was able to, break it down.
Martha, the money woman, this early Saturday morning. That's fine. That's fine. Thank you so much. I personally have actually learned a lot from what you just said. just to remind them, the attendees, you can always feel free, drop a question in the Q&A section, and we're looking forward to answering some of those. Martha, I'm still with you, women first and women second, right? So still with you, you mentioned that dividends are actually not the only way that people make profit on the shares that they buy. So your company now that is doing 2,000 per share is a very good company. And your dividend yield from what you said is about 10% because 200 per every one stock you have. So that's fine, but why? Because obviously there will be capital appreciation while you're doing your company's good work, and then a stock is increasing from 2,000, 2,005 to 3,000. I have that capital appreciation. So why the extra dividend yield? Why do companies pay dividends? If I'm just to be straightforward.
Yeah, Louis, my company is not cheap. Yeah. So yeah, the thing is that, right, this is why I love stock trading. There are various investment instruments in the financial markets, but my best is stock trading. Like my preferred is stock trading. And the reason is because I get to gain from both sides. Like I don't think there's any investment that gives you a double way a return system, right? So we talked about the capital appreciation, which is the main thing. Well, you just raised it up, which is the main thing about stock trading. My company could be valued 2,000 today, as long as I keep operating, as long as I'm moving every year, I'm making money, I'm expanding my business. There is a high possibility that my stock goes really high. So first of all, my stock could move to 3,000, and that's capital appreciation. That's 8,000 on 2,000. But for dividends, a company still says we're going to give you dividends. So the reason why companies actually pay out dividends, right, is one of the major reasons is to make their stocks attractive and profitable. It might not be the major reason, but I'm starting from there, right? Because dividends come within a certain period, especially for short-term investors. Dividends could come quarterly, they could come annually. And when you get dividends every year, you know your capital appreciation is there. It makes you happy. It makes other people want to buy into the stock because everybody likes to receive money in more than one way, right? So in turn, what that does to the company, which also helps you as an investor, is because you pay dividends regularly and you pay good dividends, people would want to buy your stocks. And when there is so much demand, what happens? Price goes up, right? So you have more people who would see your company as exactly as a good company. And secondly, it goes a long way to show how stable you are. It shows that, oh, this company is stable. It helps you your valuation, because if you're paying dividends and you're paying a certain amount and you're probably even increasing it every year, people would look at you and say, yes, that company is profitable. This company is able to maintain this dividend payment every year, and their stocks are still rising. So it's one way, it's another way that it's another reason why companies pay dividends. It's not to say that companies that do not pay dividends are in good companies. And that's why when it comes to investments, we need to be able to see to the right advisors and know what our goals are, know what we want before we can really advise you. For some companies who don't pay dividends, they will tell you that they retain that profit and put it back into their capital to expand the business. And they just tell you that, oh, but your capital appreciation is good. But nevertheless, whichever one that you decide to go with, we're here with you. We're here to tell you why you should go with a dividend paying stocks or not. But this session is for dividend paying. So we focus on dividend paying stocks. Thank you, Louis.
Fantastic. Thank you so much. I sincerely appreciate that. So let's turn it over to Abidin. Martha has explained a good deal about what dividends are, some types of dividends, why the companies pay, dividends in addition to capital appreciation. So Abidin, the title of this webinar, Profiting from, Dividend Declaration Season. What exactly is dividend declaration season? Some people call it earnings season as well. So if I can just turn it over to you, Abidin, what is dividend declaration season or earnings season?
Thank you very much, Louis. I think, like you rightly said, I think Martha did justice, just trying to whet our appetite, lay the foundation into what we call dividend season, or why people usually call it earnings season. So for most of the companies listed on the exchange, the financial year that run from January to December, release and to the market 2 months after the year end, which gives to the company release management account. body their result drop to the market around March, right? And that's along dividend for it's something exchange. They have their year end at December. Result in March, result dividend declaration follows, and usually they give.
Okay, Abidin. Matt, I don't know. I think Abidin has a slight challenge. It's like there's a network challenge. Matt, I don't know if you're experiencing that as well.
Yes, likewise.
Okay. Okay, so Abidin, if you can hear us, you're having a slight network challenge. It's okay. While we wait for Abidin to come back, just from the little I could get from what he said that dividend declaration season is actually, a particular season where most of those companies that are listed on Nigerian Stock Exchange actually declare results. By results, I mean, so for instance, Martha's company now, you've done your full financial year and then you've declared, X billion amount of Naira. So you've declared that result, you're publicly listed, you're required to do that. And then a lot of companies actually have that particular time of the year when they do this, usually March to April. So that means after our election season, we'll now have dividend declaration season where we can make some money. Oh, Abidin, you're back. So it's like we lost you there for a bit.
Okay, I apologize, please. So,
okay.
Like I said, so around that March, April, because of the frequency of results and frequency of the dividend declaration, we usually call that period in the market earnings season or dividend season. Is that straightforward as it sounds to me? Thank you.
Fantastic. I was even using Martha's company as an example. That after she has declared her billions, and then we can now see what dividend she's going to pay. So that's fantastic. Thank you so much, Abidin. Still staying with you, I would just want to ask another straightforward question. How often are dividends distributed to shareholders? So we know the dividend declaration season now. How often does this happen? How often, are these dividends distributed to shareholders?
Okay, thank you very much, Louis. I think the most popular one is the full year dividend, which comes in once in a year, and that is what most companies, that's what they do. But we also have some categories of companies listed on the floor that does semi-annually, which means they pay interim dividend on their 6 months financials and come at the end of the year to pay their full year dividend. So you find out that you see companies paying a token during half year, then they come at the end of the financial year then to pay a very, very large sum. So the reason why they do this is just to keep that, the shareholders, keep them liquid. Martha mentioned earlier on reasons why investors, one of the reasons why they invest in stock or invest, generally is for adequate return. But what investing in shares also offers shares, it's liquidity. And one of the ways that companies seeks to make their shareholders liquid is to make sure that we don't just wait till after a full calendar year before we give you a return. We return in the sense that they are sharing part of the profit they've made. They come and share some to the shareholders after 6 months. They come at the end of the year to give them a large chunk of that money. So you see the tier 1 banks, most tier 1 banks on the floor of the exchange, they pay interim dividend. I think some bureaus as well, the likes of Nigerian bureaus, pay interim dividend as well. And a handful of some other guys on the floor pays interim dividend. But we have a particular company on the floor that also pays its dividend quarterly. That is separate. I think for about 2 years now, they've had the policy of paying, dividend quarterly to their shareholders, which is one of the things you get in other climes. And we hope that most of the companies also listed in our country, get to the point where they give their shareholders. Don't forget that among the categories of investors that you have on the floor are retirees, right? There are some retirees that invest in dividend paying stocks. And so getting paid once a year, may not favor this kind of investors. So, when I say retiree approach me and say, I want to invest in the stock market, I want to invest in, companies that pays, dividend regularly, I usually recommend Seplat, because what that does is they don't even have to wait every 6 months to get paid. With Seplat, you get paid every 4 months. And if you can spread that payment probably in your own bank account, it still makes it look as if you're still earning salary, which is one of those things that, dividend tends to do to investors. Just make sure that there's a regular stream of income coming your way, even without having to sell an investment. Thank you.
Thank you so much, Abidin. I had to breathe that in and out. So exactly what you're saying is, generally speaking, there are 3 types, right? So there are the companies that pay annually once a year. There are the companies that pay semi-annually. You said mostly the top tier banks, and that's on the Nigerian exchange. And then there is also a practice that usually happens abroad, which Seplat has now brought, to Nigeria, of paying dividends every quarter. And you're even going as far as recommending that for retirees, so that that level of liquidity is increased across any. I think that's fantastic. We're getting a lot of value. And just to remind our attendees, feel free to put your questions in the Q&A box. We'll be more than happy to answer them once the time for Q&A arrives. So Martha, let's come back to you and your company. So I want to ask, right, following through from what Abidin said, who exactly is eligible to receive dividends, right? So when somebody, if you're expecting dividend, that means you must have done something, right, to expect that. So what can people do to become eligible, to receive dividends? Is there a particular time frame? Is there a period of time that what do people need to do really to receive these dividends? That's what my question is.
Thank you, Louis. So first, everybody on this phone call and on this Zoom call, everybody, including me, you and Abidin, we can all gain from the dividends of any company that pays dividends from their profits of last year. I know some people will throw up the question and say, I don't even have a stock account. I have not even bought the stock. So what's Martha saying? So what Martha is saying is that everybody's eligible to have to benefit from this period. And that's why it's important that we're having this Zoom call now. So for companies who are declaring now, Abidin has spoken about the dividend declaration season. For companies who are declaring now, the profit they are declaring is profit of 2022, right? And one would say, oh, I didn't hold the stocks all through 2022. So how can I benefit from it? So there's a thing where at the end of the year, yes, of course, you audit your results. If you have a company, if you have a public company, obviously you have all the formalities, the policies and the processes. You audit your results, you declare your profit, and the board meets and picks and decides how much they want to pay, and that's called the announcement or declaration date. So the board says, this is the amount, this is the profit we made, this is the amount we want to pay for every unit of our shares out there, meaning that everybody gets the same amount on 1 unit. So what just differentiates you and I, Lou, is that if I have 1 million units and you have 100 units, of course, our dividends return will be different because of our different numbers of units, right? Then what takes me next? I'll go next to qualification date. So that's very important. That answers this whole question. Qualification date is the company says you have to have had my stock at this particular date to benefit from my dividends. And usually when you go into the dividend declaration season, the qualification date is always a date that's after, like, it's saying that it's obviously comes after the announcement. You have to have had my stock at this date, right? So currently, many companies will put their qualification dates all through March and maybe some April, meaning that we're having this call today, the 18th of February. I tell you now that if you reach out to me on Monday, if you reach out to us on Monday and you buy shares, you would benefit from every company that's paying dividends, right? And everyone who also heard it for 2022, you're also entitled. But there's also something called expiry dates, ex-dividend dates. right? You might have said that, oh, I've had it for the whole 2022. So if I sell it now, I should get dividends. No, the companies also put out an ex-dividend date that says, if you hold the stock up until this date, the day we close our books, you would get a dividend. So if you sell your stocks after the ex-dividend date, you do not get the dividend for 2022. But if you hold until the ex-dividend date, you get it. So this announcement, this policy that is released comes with the announcement, the qualification dates, the ex-dividend date, and it all happens within this first quarter. It happens within this dividend declaration season. So everyone is eligible. You don't have to hold the stock. You do not have to have held it for a very long time. And the good thing is that you buy stocks now, you get the dividends from the declaration. If you are a short-term investor, you are not looking to leave it for a long time. Second quarter, third quarter, stocks appreciate, you sell off your stocks. You see what you're doing. You're beating the system. You're beating the system where people have to hold their money for 364, 300 or 180 days to get that fixed return. But for the stock market, is a cheat. And that's why I love it. So I hope I answered you, Louis.
Power. That's fine. You answered me and more. So that's fantastic. Thank you so much. But Martha, just as a follow-up question, right? Because you talked about the announcement dates, when the companies say, oh, this is what we're doing. And you talked about the qualification date, which is when anybody you don't have to have the shares right from 2022. Before that qualification date, if you buy it, you're eligible for dividends. And then also the ex-dividend date, which is the date that you need to hold the shares up until, right? If I'm saying something that's not okay, you need to call me back.
No, so I'll call you out. Sorry.
Great, that's fantastic. So you need to hold those shares up until the ex-dividend date for you to be able to partake, even if you've been holding it right from 2022. That works just fine. But is there actually a specified date allocated to? So is it like all the companies on the stock exchange, they have a particular qualification date, or what really? Is there a particular date that's allocated to all the stocks, on the exchange as regards, qualification dates for some of these dividends?
First of all, I give it to you, Louis. You're following. You're picking up well. You're a good student. So I go next, right? Yes, that's a good question, and thank you that you're asking me. So I clarify really. As much as these companies are all listed on the stock exchange and they're regulated, and we're all on the Nigerian stock exchange, we cannot forget that these are different companies. These companies are different companies. They have different owners. They have different methods. They have different policies. They have different board members, actually, right? So companies do not have the same qualification dates or the same announcement dates or the same ex-dividend date. They all have different dates, right? But the thing is that there's a period, and that's what Abidin talked about, the dividend declaration season. There's a period where these stocks, where these dates usually come up. So from now, this is the season. So from now up until April, you would be getting a lot of circulars, companies releasing, oh, this is what we're paying. This is when you need to have had our stock to benefit from it. This is when you need to hold our stock to actually benefit from it, right? They don't have the same qualification date. And I know that it might be very difficult for our clients, especially people who are not like, you're not an expert financially, and you're like, how am I supposed to be following dates? Where would I see this date? Should I check WhatsApp? Should I check Insta blog? Should I check anyway? That's why we're here, really. So what we do is because we are the leading investment bank, we are privy to this information, right? So we have this information, we get it, and we circulate it amongst our clients, and we're able to discuss with you on an individual basis about, okay, so you want to tap into this opportunity? This is what is on now. Do you want this one? Do you want that one? So yes, they all have different dates. You don't have the same dates, and that's why we're there for you. But it's important to note that when you're buying stocks is I don't want to go, for people who are like, maybe we're just starting, I don't want to confuse you, right? But if they say the qualification date is March 15th, please don't wait up until March 15th. You don't have an account. Don't wait till March 15th and start calling Martha or Louis or Abidin and say, please help me, you're my plug. I have 1 million. Some people say, I have 10 million, I have 100 million. No, it's not, it doesn't work that way. At least right? Just you have enough time, give at least 3 days before the date, right? So get your accounts opened. You do not have to wait till you have opportunities where you open your account. Get your accounts open, discuss with your advisors. As the webinar goes on, we will be sharing our channels and people you can reach out to, or how you can reach out to us, and we'll be there to help you with this different dates. To not confuse you, we'll be there to guide you. Thank you, Louis.
Powerful. Thank you so much, Martha. Abidin, turning it over to you, I just want to draw on your wealth of experience, as regards securities business in general. Martha has expanded on some of the dates that we need to be aware of. And as an experienced trader, Abidin, I'm just wondering, what companies pay dividends, and which of these companies should we be looking at for this season? Because this is a very critical season. It's a season of election, it's a season of abundance of Naira notes, it's a packed season. So just from your wealth of experience, right, which of these companies should we be looking out for, for this dividend declaration season that we're currently in?
Thank you very much, Louis. That is a very interesting one, and I'm sure it will interest everyone on the call as well. I think most healthy companies listed on the floor pay dividend, and this is not a secret. The informations are in the public domain. And because most of these companies, they publish their account on a quarterly basis, right? So you don't even need to wait till the end of the year for you to know which of these companies has been profitable over the last 12 months. If you go by their Q3, which is their 9 months account, and when they publish the previous year performance as well. So you can see if the company has been growing its numbers or not, and that will tell you if the company is able to even match the previous year dividend or not. But just off the top of my head, I know most of the banking stocks, they say one banks, they pay good dividend. I own United Capital without bringing in any bias. We pay good dividend as well. I know last year United Capital paid 1.55 kobo, 1.50 kobo, which was like 13-point-something% dividend yield. I would expect that the company would surpass that this year, going by the 9-year financials as well. The top guys in the industrial goods space, the likes of Dangote Cement, WAPCO, they pay good dividend. If you go to the consumer goods space as well, flour mills, PZ, they pay good dividend. Go to the bureaus, your Nigerian breweries, your Guinness, they do pay dividend as well, right? Oil and gas, you have Total, you have Seplat, they pay good dividend as well. So by and large, dividend, like I mentioned earlier on, most LD companies, they pay good dividend because what it does is it creates liquidity in those companies. It makes, allows them to delight their shareholders. It makes their shareholders liquid. It also makes the shares of the company liquid as well, because investors, they trade shares of companies that are liquid, right? So there are people on these calls that were not privy to be around when Nigerian breweries, Guinness, United Capital, UBS, and AGTB, you can mention any of this firm when they did their initial public offering, which was when they offered their first set of shares to shareholders, right? So if you're just opening a brokerage account today and you like to also benefit or tap into, any of these companies, how do you get it, right? You need to approach your broker to buy from existing shareholders, right? So the only reason anyone trades your shares or anyone is interested in buying your shares is if you are performing. If you're not performing, your shares will just be there. No one buys it. You get bad publicity from that, and it shows that the company is not living. And I can assure you, if shareholders are saying the company is not living by not buying its shares, it's just a matter of time before that company goes under. Except there is a strategic reason why Martha mentioned earlier on. At times, companies decide to plow back profits as against going to the public again to borrow. If you have an expansion drive and you need to, plow back some of the profits you make in previous years, you would rather do that by explaining to your shareholders, maybe we don't pay, the kind of dividend we pay year in, year out this time around because we need to plow some money back, right? Or we don't even pay at all, but we assure you, once this new project, this expansion drive, once it comes through, going forward, we'll be able to pay you more than what you are used to, That way, even the shareholders will be, they'll be willing to, sacrifice a year or thereabout for the management of the company to see such expansion drive true. But to cut the long story short, when it comes to dividend payment, shareholders don't joke with it, the market don't joke with it, and it signals that the company is healthy, and that is a share price is by delighting the market. Thank you, Louis.
Fantastic. Me, sir, I won't also joke with it because thank you so much, Abidin. Just a follow-up question. So how exactly are the dividends paid? It's really straightforward.
Okay, also good one, because I've been opportune to attend seminars like this, and I see, people in the audience telling me investment in the capital market is too complex, it's too complicated and all that. So I'm here to tell you that everything is now a complete straight-through process, driven by technology. Starting from the aspect of opening a brokerage account, to trading, now to even receiving your dividend, right? So when you buy into a company for the first time, your broker will give you some set of forms, among which you have a transfer form. This transfer form just, helps the broker is what the broker uses in, submitting your signature, your specimen signature to the registrar of that company. Once that is done, you get another form. We call it e-dividend mandate form that the shareholder takes to his or her bank, right? Fill the endorse, they confirm that Louis, you are the one that owns this account. These are your account details, and this is your signature. Once that is done, they submit that same form again. It's sent to the registrar via your bank. You don't have to do anything. All you need to do is just fill the form, take it to your bank. They stamp it, they endorse your signature, and they send it to the registrar, right? Once that is done, you do that for each company. So if I'm buying into a company, let's say my strategy is to buy 1,000 units of United Capital shares every month, right? I don't need to repeat that process every month for United Capital. I only need to do it once, because once the registrar of United Capital has my signature and account details, once they no longer need it. And what that means is year in, year out, anytime United Capital declares anything, my share of that money, don't forget that dividend payments, in a layman's term, is just a profit sharing. My share of that profit goes directly into my bank account a day after the AGM. AGM is the place where shareholders agrees with the board of directors what they've declared as dividend. So the board of directors, they meet, they meet to discuss the full year audited accounts, and they agree that based on all they've analyzed, based on all they've seen, they are able to pay a certain percentage. It could be that they have it in the company policy. The policy might say every year we pay 40% of our profits. We pay it out as dividend to our shareholders. It could be 60, it could be 70. We have some companies that even does as high as 70, right? Once that is done, they also announce an AGM date where the shareholders come and ratify that. Say yes, we agree with what you are paying. And once they do that, the next day, right, the very next day, at times even some banks, they even do that same day, the evening of that same day, shareholders start receiving alerts into their bank account. And you can do that for all of your investment. So to just narrow the process, or to summarize the process, you open a stock account, a brokerage account, you fund the account, right? I'm sure your advisors or your plug in that company would give you tips on the companies that pays what and which one, based on the yield, because the yield in market differs. The financial industry sector has the highest yield, right? When you compare them to, let's say, the tech company, for instance. And MTN recently declared 10 naira on a 245 naira shares. That is around 4.something%, right? I mentioned that last year United Capital declared 150 kobo on a 12 naira plus shares, which was around 13 or close to 14% yield, right? So you have most of the higher yield in the financial industry space, but because you wouldn't also want to construct a portfolio where you have just a particular sector, you want to have a well-diversified portfolio, right? So you have the financial sector, probably you throw in the tech guys in there, and you put the industrial goods, just to have a balanced portfolio. But I'm sure your advisor, we do that as well at United Capital, just to make sure that you are making an informed decision when it comes to your investment. would give you these tips. We'll let you know which of the sectors has the highest dividend yield. So you tell us to buy, you fund the account and you tell us to buy, or you even go onto our trading platform and do the execution yourself, right? After which we'll send you the form, the transfer form and the e-dividend form. You you sign the transfer form, you send it back to us to help send to the Nigerian Stock Exchange. The e-dividend form you take to your bank, you fill, your bank endorses and send to your registrar, and that is it. Like Martha rightly explained the other time, once this company releases their results, they tell you the collocation dates, they tell you the SDIV date as well, and you see the payment date there. On the payment dates, just sit down in your room, your sitting room, in your office at your lunch, or the cup with a cup of wine, and just expect that alert to drop. I can assure you it will drop. The system is as fluid as that. Thank you, Louis.
Abidin, in 11/10, right? 11/10, because I can also remember, so I personally am actually a new generation stock investor. So I started 2018, 2019, and some of the processes you said I can really relate. And then what you just see happening is around that March, April time, bam, bam, it used to be very sweet. It used to be very, very, very sweet, you know. So thank you so much for that. I sincerely appreciate that. And then you also mentioned something about how the dividends are agreed on, where, you know, the company goes, they say we declared X amount of, you know, money as profit, and then we're paying X amount as dividend, and then they call the shareholders, and then the shareholders now agree. That's democracy. That's the democracy that I've been looking for. That right there is democracy. So, but thank you so much. I think that a lot of us on this call have actually got a better understanding, you know, of this dividend declaration season and what goes with it. So, Martha, just before we take the questions, just a pointed question, and for you, you know, so for somebody that is now interested, right? Somebody that is interested in benefiting from this property season, how did it start?
Thank you, Louis. Abidin is so experienced that I think he already even answered the last question, but I'll just do a recap. Yes, so for anyone who wants to start, you're new, you haven't traded before, you can start trading on Monday. In fact, you can open your account today. Whatever phones that you're using, you go on Play Store, you go on App Store, you download Invest Now. Invest Now is there. There's no competition. You put in your details, your account, you're notified immediately. Right on Monday, in less than 48 hours, in less than 48 working hours, you have a stock trading account, you have a CSS account, and that's just not a CSS account that sits with us. It's a CSS account that's regulated. It sits with the regulators, right? It's not just a United Capital thing. You have access to it. You can decide to do whatever you want with your CSS account, but we're just like the intermediaries. We're the ones authorized to help you open this account. You open your account, you fund your account, you reach out to speak to an advisor. So the good thing about investing is that we're not leaving you, regardless of when we say mobile, you can do it from the comfort of your home and all of that. We already have this information. We have emails, we have app information that can advise you on what to do, but you can also reach out to speak to us. We're ready to speak to you. We're ready to take all your calls next week. We're ready to set up the meetings, your emails. If you're in whatever town that we have our offices, you can come in, we can come and meet you and we'll talk about it. So we understand your goals, your financial goals, we understand the amount of money that you're willing to invest, we understand your liquidity, you know how long you want to keep your money for, or how long you want to, when you want to get your money. We advise the stocks to buy the different stocks in different sectors, and you can start trading. Before Friday, you'll be a proud owner of Engie. So look at all these companies. Be a proud owner. You can go there and tell them that, say, I'm a shareholder. Yes, you have your contract notes to show for it, and then you just watch out and listen to through our various channels. We'll let you know their qualification dates, their announcement date, the amount they are paying, the payment dates, and that's how you start to get from me, right? Then for people who are already existing owners, like you already have shares in some companies that are going to pay dividends, that's fine. That's all right. You already know how we've been communicating through our various channels. Also wait for the dividends and watch out for our circulars with the ex-dividend date, so you do not sell before that date if you want to get your dividend. So yeah, that's just simple. But I'm sure Louis will put out some numbers or some email addresses that you can reach out personally if you don't want to go through the app. We'll also run a manual management system. If you do not want to use the app, you don't want to be digital, call me. Anywhere you are, call me. I'll be there. We'll be there. Thank you, Louis.
Powerful, powerful, powerful. In fact, Martha, you mentioned over 4 different channels. It's not because I work here, but I feel that like the company actually puts in a lot of effort to get across all levels, across all the market segments. They put in that effort. So thank you so much, Martha. Thank you so much, Abidin. This has actually been very interesting. I'm looking at the comment section and I've seen quite a few comments there. Thank you so much to all our listeners who joined in and actually participating and asking this question. So let's just quickly dive into the answer. This is the question and answer session now. So they are ready to ask the questions that they had across the presentation, and then Martha and Abidin, and maybe small from me, just very, very small, will be willing to answer those questions. So first question from Promise. I don't want to call the other name so that I don't murder it. Okay. Which United Capital portfolio enables one to take advantage of these dividends? Before I turn this question to Abidin, I know that in another of our business, our asset management business, we have mutual funds that actually also pay dividends. So I'm just guessing United Capital portfolio, but for the sake of this conversation, we're actually on the United Capital Securities business, and that's what we have been talking about since we started. So Abidin, if you could just throw a bit of light us around which of the portfolios, I'm guessing the person is talking about stocks. So which of the portfolios enables one to take advantage of these dividends? Abidin, over to you, sir.
Okay, thank you very much, Louis. I think when it comes to which portfolio, the clients would have to construct a portfolio, right? So ours is to guide you, when it comes to constructing that portfolio, if your aim is to construct a portfolio and have shares in this portfolio that pays regular dividend. So if you tell me I want to construct a portfolio that pays a dividend quarterly, that means you're constructing a portfolio that has only separate tenants. But if you want a portfolio that pays maybe quarterly dividend, pays interim dividend as well, that means in that portfolio there should be separate. We should have some banking stocks in there as well that pays dividend semi-annually. And if you just want a portfolio that pays good dividend, that means I would have to rank companies based on their dividend yield and give you a list of companies that I think would meet that objective. So the client objective matters a lot when constructing a portfolio, and the kind of your payment expectation will also determine the companies that will not have to be in that portfolio. I don't know if that answers that question, Louis.
It really does, and Abidin, I appreciate you for making the answer very concise, so that we have a better chance to go through all the questions. So I'll just take the next question. It's slightly long. Let me read it. This presentation is from Anonymous, right? So this presentation is considered timely. My main challenge is that there's a need for investment advisor who can take the burden of you in deciding what companies to invest in, appropriate time to go in and come out, and further to advise on good portfolio mix. If these are gotten right and experience good returns, clients will certainly be excited. Okay, so I think what this client is, so they end off with saying, but if there can be a form of assurance or meaningful returns and regular advice / guidance, people will be eager to invest. So I think what this person is trying to say, thank you so much for that question. They are just trying to tell us that what level of guidance are we willing to provide in this investment journey? What time to go in, what time to come out, of the market? Do we actually render those services? Abidin, I would love it if you could just take that as well for our listener. Okay,
thank you very much, Louis. At United Capital Securities, I think we do that. So it's not just around the earnings season. On a weekly basis, I think every Monday to be precise, we publish a stock recommendation. So if you get these stock recommendation sheets, you'd see stocks that we cover in every sector. On that sheet, you see their previous year dividend, you see data like EPS, you see data like a target price, a target entry price, a target exit price as well. And you see what dividend payment is likely to look like and what that will translate into dividend yield, right? But I know that this sheet could be technical at times, which is why we also have some lines there that you can reach out to if you need any further clarification. Right, but this is what we do well at United Capital. we try to guide our clientele base or our clients through this process. So we're not just saying, come open an account, just start investing without us, holding your hand through the process at least until that time, or until such time where we think you are good to go on your own. It's just like in any walks of life. You need people to probably handhold you, in the early stages before you become, able to stand on your own to go on that journey yourself. But I think we do that well. Apart from publishing these stock recommendations on a weekly basis, at every close of trade as well, we do summarize. So we talked about the earnings season. Companies we throw results at the market. At times, some of these results could be 96 pages long, could be 100 and something pages long. But our research guys, they break these results and summarize it in such a way that just by a glance, you can understand what it does mean by comparing it with their previous performance, just in a nutshell, that enables our clients to also make an informed decision, as against having to read through hundreds of pages, before they could get to the meat and bone of the whole story. So I think we do that. And aside from even analyzing the company results on a daily basis as well, we try and, send to our clients a review of what has happened or what has transpired in the market. So you get that every other day, right? So after a close of trade on, let's say Monday, first thing we do, we push out on the Tuesday morning is to analyze what happened in the market the previous day and tell you what might likely happen, in the market on that particular day. And, we repeat that process on a daily basis. So as I say, we give our clients enough updates that enables them to take, informed decision at every point in time. Louis.
Very well spoken, Abidin. Thank you so much. So in a nutshell, what you're saying, we have research recommendations that come in every week to show which stocks to buy. And close of trade every day, we compress the 111 pages reports to a one-pager that they can easily access and once they sign up. So thank you so much for that. Martha, I'll just turn it over to you. It's like you're looking inside my eyes. So this next question is for you. So Anonymous is saying that I didn't understand the difference between the cash and stock dividend, and how much do I need to start? The person also asked, how do I start? But we've actually spoken extensively on that. So question again, the difference between cash and stock dividend, and how much do they need to start? So Martha, I'll turn that over to you.
Okay, thank you, Louis, and thank you for that question, whoever asked it. So the types of dividends, I talked about cash and stock and dividends. So basically, like it just sounds, cash. This is the dividends that's given to you in monetary form. Like you can do whatever. The company is not saying that I made profit and I'm giving you cash, give me the cash back, right? The company is saying this is what we made and this is what I'm giving you. So like when Abidin talks about the process where you have registered your bank account, the money goes into your bank account to do whatever, flex it, spend it, or even probably reinvest it. That's cash. Then for stock dividends is I'm not giving you money, right? But I'm going to give you extra units of my shares. Right, and this is what is also called bonus. It's not something that is done. It's not done like every year. A company can just say, okay, I want to reward our customers or our shareholders. And for every 10 units that you have, I'm going to give you an extra 1 unit, for example. So that 1 unit is like as much as you're going to buy an extra unit, but you're not buying. They're just giving an extra unit of that share. So your total holding, if your bonus shares gets up to 100 units, and you previously had 1,000 units, you now have 1,100 units without spending any money. So now you have 1,100. If that company decides to pay cash dividends, your dividend is on the 1,100 units that you have, even when you didn't spend money in purchasing the 100. So that's what companies do from time to time. They do it sometimes. I think MTN just
Can you hear me, Abidin?
I can hear you. I think we just
okay. So I think it's Martha's network.
Yes.
Okay, so that's fine.
Yeah. Please go ahead.
I think we got the meat of it. For instance, in her company now, if she says cash dividends, then we'll receive it in our bank account.
Exactly.
If she says dividend, then if we had 2,000 units before, depending on the sharing ratio, we are going to have additional units that we can even earn cash dividends on. So I think that works just fine. Abidin, just very quickly, I'll turn this next question over to you from year-to-date, Amy. How many times does United Capital pay dividend in the financial year? Just a quick answer.
Once. So United Capital have a policy of paying just 3-year dividend.
That's interesting. Ibekwe Henry says, so what happens if the company makes a loss in the time stipulated? So that's in the financial, year. What happens if the company makes a loss?
So that's an interesting one. It is a possibility, but at times that doesn't preclude the company from paying dividend, because the company could actually pay dividend from its previous year return earning. Earlier on, I mentioned the fact that some company has the policy of paying 40% of whatever they've made in the financial year, some as high as 70%. But what that tells you is they have a certain percentage as returned earnings. So you are paying 40, you have 60 saved somewhere. If you are paying 70, you have 30% saved somewhere. So for any calendar year where you've not made profit, right, the company could pay shareholders, or board of the company could agree for dividend to be paid from previous year retained earnings, and if it's ratified by the shareholders, and that would be the case for that year.
Wow, this is really insightful. We have a lot of brilliant attendees on this call. These are very, very insightful questions that have been asked so far. And while we're waiting for Martha to rejoin, Abidin, let me just ask an additional question here by an anonymous attendee. So the person says, I'm interested in that company that pays dividends quarterly. I think that was Seplat.
Seplat, right? Yes.
Seplat. Okay, so that answers it. How do I get started? We've actually spoken extensively on that.
Open an account. Yes,
exactly. So let's go over to the next question. On qualification dates, prices tend to be more higher than close to the date. I'm not sure if this is a question. I think this is a comment that on the qualification date, prices tend to be more higher than close to the date. So Abidin, I'll just try. I said I'll contribute small, right? So for me, it's law of demand and supply. If everybody is trying to purchase the stock before that time, then the price will definitely go up. So I think that's more of a comment actually than a question. So we're going over to the next question. Good morning. Thanks for this session. Thank you so much for joining. We'll appreciate if some of us can get slides we can check up to really understand this as a whole. Some of us are youngsters in financing. That's interesting. That works just fine. We actually have very detailed brochures that we can send to the email list on this webinar. So for people, we have the email, so we can actually mail that out to them, and then you can benefit from that. So Felix Ebosa here says, please clarify to your listeners that capital appreciation is only realizable when the shares are sold, unlike dividend that you benefit from even when the shares have not been sold. So this is actually a comment, but Abidin, I want you to weigh in on it just for a couple of
100% right. So you only get the capital appreciation, not that it's only realized when it's sold, but in valuation, whether you sold it or not, you can actually see that your portfolio has appreciated. So say for instance, you started an investment portfolio with 100,000 naira in January. And because the prices of the securities or the stocks in that portfolio had gone up, let's say by June, you print your valuation statements and you're already at 150,000, right? Without liquidating that portfolio, you can say that your portfolio has appreciated by 50%, right? But if I now want to realize those appreciation, then I have to send a mandate to my broker to sell for me to realize those appreciations. So it's 100% correct, right? So realizing is different from realizing the profit is different from having the profit just mark to market. When I say mark to market,
Okay, Abidin, I don't know can you hear me?
Yes, I can hear you.
It's okay. So you were just, corroborating what that contributor said. So Martha, you're welcome back to the call. Thank you so much. Let's have this next question answered by you. So first of all, Taiwo Baptista says, how do we get started? Just to close that out, investnow.ng, right? Invest, I-N-V-E-S-T, now, N-O-W.ng as one word, and then you can start your investment journey. So Martha, Sunday Sasuna, I hope I'm not murdering these names. Sunday is asking that you should please go over the ex-dividend date explanation again. And is a shareholder qualified for dividends if he or she sells before or after the ex-dividend date? So they just want to know, is it before or after ex-dividend date that qualifies them to get the shares? So just in a couple of seconds, Martha.
Okay, thank you, Louis, and apologies. My network is trying to be a healer this morning, but I'm back. Yeah, so thank you for that question. So the ex-dividend date just says that you have to have had the stock up until the ex-dividend date. If you sell before, you forfeit your dividends on that stock, regardless of how long you've had it. So you could say, oh, I had it all throughout 2022, but why am I losing it now? So you have to have had it up until the ex-dividend date. So if you have your stock up until the ex-dividend date, you still get your dividend. So if you sell the day after the ex-dividend date or days after the ex-dividend date, you are still entitled. Your name is in the register. They have closed their books, but your name is in the register that the dividends that's due to that number of units that you had is yours. It's still going to be paid into your bank details. And if your bank details is not provided, something you call unclaimed dividend, is still yours. When you decide to claim it, when you decide to update your records, you would still get it. So yes, so if you sell before, you lose it. If you sell after, and after you get it, and yeah, so that's it. I hope that was clear enough.
I mean, that was clear, and I'm sure that it's also clear for Sunday who asked the question. Thank you so much, Martha, and you're welcome back once more.
Thank you.
So I'll turn this question over to you just in a couple of seconds because I'm actually watching time as well. Harrison says, please, could you give us the list of top 10 companies with the highest dividend yield? So he's going in straight for the kill. So he just wants to know over time, the list of top 10 companies with the highest dividend yield. Abidin, if you can give that to Harry.
Okay, so I try as much as possible to really avoid naming names, so it doesn't look as if I'm demarketing somewhere, I'm marketing some companies. But what I can say is I know the financial service sector, where you see most of the banks, where you see the likes of United Capital, they have the highest yield in the market, and the reason is not far-fetched. For the large cap store, so imagine an MTN that pays 10 naira. 10 naira looks a lot, but the price of 1 unit of MTN is currently 245 naira 50 kobo. So by the time you do, you work out that yield, it comes to around 4%. Not because the dividend payment itself is not attractive enough. It's just that by the time you now factor in the denominator, which is the share price, then it brings it down. But for the financial service sector, a GTB, for instance, or a Zenith, for instance, would probably pay around 2 naira 80 kobo, and they are currently valued at 25 naira 10 kobo. Right, you see the difference. So that will be giving you a yield of around 12%. A United Capital, I think, closed at 15 naira 30 kobo on Friday. Even if it repeats last year dividend payment of 1 naira 50 kobo, that would give you a yield of still more than 10%. So you'll be thinking, but MTN pays 10 naira, United Capital 150, or even a GTB or UBA, or let's say even a UBA pays 80 kobo, full year dividend. I think UBA closed yesterday around 8 naira 30 kobo. That still gives you around 9.8 dividend yield, right? But so if you are looking naira for naira, you'll be thinking I should be buying MTN because it's paying 10 naira. But by the time you factor in the share price, the share price is 245 naira 50 kobo. You see that you may be better off, prioritizing those guys in the financial sector and just having the likes of maybe MTN, Seplat to have a balanced portfolio. So, like I mentioned earlier on, investment objective do decide some of these, influence some of these decisions. So it depends. If you want dividend yield, I think the financial service sector will be your best bet. Thank you, Louis.
Wow, that's interesting. That's interesting. Thank you so much for that. We have quite a couple of questions, but what I can see is that a lot of the questions actually tie into some of the answers that we've given. So what we can do is, for everybody that has signed up on the webinar, we'll actually communicate all the emails of the panelists here, so they can send us emails, and then we can just respond to some of those questions that maybe they joined late or they weren't privy to listen to the answers to, at the beginning of the session. So we should be able to do that as well. Martha, someone is asking, an anonymous person is asking, why is it that there are some stocks that can yield dividends, meanwhile some others don't? What's the brain behind it? You probably already answered it before, but just to give the person a short insight on what that is. Thank you.
Thank you, Louis, and thank you, Anon, for that question. So earlier when I spoke, I talked about the reasons companies will pay dividends, right? And like we said, some companies will pay dividends because it's their strategy. So we all have we have different goals. If you have a company, your goal is probably to make your company sustainable. Your goal is to make sure that your company outlives. Your goal is to make sure that your company expands every year and increases, right? And people have different approaches to this. Like some companies believe strongly that paying out dividends every year makes them look good. Like, I mean, I'm just here and I'm just getting dividends. My capital appreciation is good. If I decide to sell, I would make some good money. But I'm just here, I'm just getting money in my bank account. So it would make other people say, like Louis now, you said, oh, when you started, you were just, April money was just entering your account. If someone was seated beside you and Louis just said, Allah, they'll ask you, Louis, who is sending you money? And you see that most people make decisions because of that. The only problem is that some people do not ask for the right financial advisor. They just say, oh, Louis, you're getting a lot. Oh, I'm going to start trading. And they don't look out for an investment bank like United Capital to advise you. They just start trading, right? You get, so what we're saying, that's what the companies want. They look good. It means that they're doing well. If they're able to pay profits every year, it means that you're not running at a loss, right? You're paying profit. And for companies that do not pay, it doesn't mean that they are less profit. The explanation behind that is that they would rather retain profits and put it back into the business. So we have the capital and we want to put back our profits. Sometimes it could mean that maybe they also have a new project that they want to embark on, a new capital intensive project, right? So some companies might decide to raise new funds. That's when they do the public offer, like, okay, we have a new project that we're expanding and all that. I think that was also behind why MTN raised that last the last PO. We want to expand, we want to raise money. But some companies might be like, oh, we made profit, let's put back our profits into our business. If we put it back into our business expands. And if our business expands, our value increases. So they are just selling capital appreciation. Your money, your capital is increasing anytime you want to reclaim it from the board, right? So that's just why. But most financial institutions, like Abidin had mentioned, they pay dividends, and some of the top telcos, or they pay dividends too. So most of the very good and stable companies that we know will stand the test of time, or they have stood the test of time, they pay dividends, right? And some do not. So like I said, this will boil down to your goals. When we have conversations with you as financial advisors, we will get your goals to be able to advise you what to do. So that's just it. I hope that was clear, Louis.
No, it was clear. And I mean, it's been a really fantastic session. So many comments that we're seeing there. Shout out to Ibekwe Henry, who has just downloaded the InvestNow app and is currently uploading his details. You can see your thumbs up from Martha. So that's fine. We have a couple of questions. What I would actually suggest is that we compile these questions, and then via email, while we are sending them, the contacts of the panelists and the contacts that they can reach out to, we also put the answers, to every single question asked here, over 46 of them. We put the answers, in that publication. But I guess I'll find out how possible that is. The most important thing is that everybody on the webinar can reach out to any panelist here. Emails will be shared, and then we'll be able to take care of whatever additional questions they have. Just as a way of rounding up, if you are not like Mr. Ibekwe Henry, who has already downloaded. You may want to do that. The name of the app is Invest Now app. It's on Play Store, it's on the App Store. So what are you using Android, whether you're using an iPhone, you can always have access to that app. And if you're not so savvy with phones, you prefer laptops. We have some of our HNI clients that prefer laptop view. And you can just go to investnow.ng. So invest now as one word and .ng. For the younger generation guys who want to first of all do a bit of snooping around before they get on board, you can actually access our website, unitedcapitalplcgroup.com. That's unitedcapitalplcgroup.com as one word. Or you can go to our social media pages. We have Instagram, Facebook, LinkedIn, United Capital PLC. Always try to look out for the verification sign. So to show that the accounts that you're messaging is verified, and so that we're able to respond to you better. And then if you're a Twitter person, you can do United Cap. So at United Cap, that's what we can access us on Twitter. So maybe we should just take, just for the sake, because there are quite a lot of questions actually. Let's just take maybe one or two before we close out, so that we're able to, just get a bit more feel for what people are saying on the chat box. So Anonymous here says, is there an app where we can get information on companies on the Nigerian exchange? Abidin, if you could help Anonymous out with that particular.
Okay, thank you very much, Louis. So there is actually an app where you could get information, but I think that app is very, very expensive. You could get information on Bloomberg, but subscription is very, very expensive and also in foreign currency. But you could also get free information on the Nigerian Stock Exchange itself, right? So all companies remit their results to the Nigerian Stock Exchange, and it's free to public domain. So if you go to ngs.com, when you get to ngs.com, under company data, you could access any company information you want. If you want to check dividend for all company, for instance, you could go under corporate actions. You will see dividend. In fact, you could see dividend paid as far back as 2021. I think they usually have a 3 years dividend uploaded on that particular site. You could get company results there as well. But like I mentioned, most of these company results, they come in hundreds of pages, which is why I would advise you to just join the United Capital family, United Capital Securities family, where our research guys would summarize these results and have it at your fingertips as and when they are being dropped into the market. Thank you, Lee.
That's great. I clicked my mute button 3 times. They don't want me to respond to you. So that's fine. Thank you so much, Abidin. So you want to get information, stock recommendation reports, what the market did at the end of the day, general investment advice, sign up to United Capital. I think that's pretty clear. And Martha, let me turn this question to you. Can I sell my shares after the qualification date, even though the dividend is yet to be officially paid? So Anonymous is saying, can they sell their shares after the qualification date, even though the dividend is yet to be officially paid? So Martha, in a couple of seconds.
Thank you, Louis, for that question. So when I spoke about the announcement, the qualification, and the ex-dividend dates, right? These dates they're not spread so far. It's not like you have one in January, you have one in September, you have the other one in December. They're usually within a month, right? They're actually like close, right? So if you meet the qualification dates, it's also advisable to wait till the ex-dividend dates, right? Just make sure that the book closes with your name, and then you can sell, right? So what that qualification date means that if you buy the shares after the qualification date, you're not entitled to the dividend. So you're waiting for the dividends of the year. So if you buy after qualification dates now, you're waiting for the dividends of 2023. Or if it's a company that pays interim or you're waiting for the new dividend, not the previous dividends, right? So you have to have had it at that point. Buying after, you're not able to qualify for it, right? But the ex-dividend date is the date where you have to, your name has to be on the register, right? So if you have it up until that date, then you will get your dividends. So it's not really like it's widely spread and that you have to wait for a very long time. These things happen within a short period, and before you know, you're celebrating Easter with your dividends, plenty dividends. So you see, so just stay glued to us, and you get all the information and the explanation broken down and easily explained.
Powerful, powerful Easter celebration. Maybe just a couple, one or two more questions before we end. Someone is asking, Martha, again with you, is dividend different from shares?
Dividends is different from shares. Please excuse that I'm smiling, because I'm privy to this information because I work here. Before I joined United Capital, I doubt if I knew anything about. I was probably working with a stick, right? But this is the information, and that's one thing we do. That's why we hold these webinars to put out this message. There's so much. It's not magic. It's not a cut soap thing. There's so much information in the financial, especially the stock market, that a lot of people are not privy to, and that's why we do this. So yes, dividends is different from shares. Dividends is what you get because you have shares. Shares is you are a part owner. You have an ownership in a company by your money. I have this amount of money in this company, so that makes you a shareholder. So a share is that unit of ownership that you have as a person that is tied to a company. So I have shares in this company. I'm a stockholder. I have stock in this company. So share stock, it could be anything. But dividend is what you get because you have shares. So if you don't have shares, you don't get dividends, right? You have to get dividends because you have to have shares to get dividends. That's it, really.
Fantastic. Fantastic. Thank you so much, Martha and Abidin. If we could just have a 30-second closing remarks for all our wonderful attendees, so that we can wrap up the session. So I'll start with you, Abidin. Just closing remarks, 30 seconds, word of advice for our attendees.
Thank you very much, Louis. It's been a very, very interesting session. I like the fact that the participants are very, very active and they've made it interactive. I think, like Martha rightly said the other time, if you ask me, when is the best time to start investing? When is the best time to join this season? Don't let's wait 24 hours, 48 hours before the qualification dates or before the markdown dates, before we start calling our advisors to open an account for us. I'll say we start the process now, given that at United Capital Securities, you don't need a dime to even open an account. Stockbroking account is free for all. So open your account today, take your time to fund the account, and also take your time to study these companies and which one you want to invest in for this earning season. So I think I would stop at that the best time to invest or to start investing, if you've not started already, it's now. Thank you. Great.
Wow, great. Head trader, United Capital Securities, Abidin Alade. So Martha, I will turn it over to you. Closing remarks, 30 seconds, what you have for the attendees.
30 seconds. Okay, I'll try. So first, I want to say thank you so much to everyone who joined. This shows big responsibility, that you're taking responsibility for your financial decisions. You're taking your decisions about your wealth into your hands. We're here for you. I'm also going to just support what Abidin said. The right time to start is now. Right? Don't wait until you have money. Oh, money just came. Have the account. It does not hurt. It's a CSS account. Have the account. Follow up. Be a member of the company. Get updates. Get to understand. Call when you don't understand. And the thing about the stock market, it is not. I really don't like to use the word risk averse. People are like, oh, it's risky. It's not. You just don't know the right time to go in and the right time to leave. And that's where we come in for you. When we say stock trading is like passive income, you're not necessarily the one doing the research. You probably might type the decision, but we tell you the decision. So there's a right time. You know the right time that we're telling you to get out of the market. Somebody is entering the market. I'm not saying that the person doesn't have the right decision. Everyone has different reasons why they're investing. So if we understand why you're investing, we're able to advise you. We're not very far from you. Our offices, we have offices in over 10 places. You don't have to ever see us. We can speak on the phone. We can share emails, and we're very safe. We're secured. We've done over 50 years. I mean, we're not. We're the big boys. We're not kids.
Power, the big boys and girls, actually. That's fine. Thank you so very much, Martha. For all of our attendees, we sincerely appreciate you. We actually do this couple of other times so that we can educate you more on some of the things that we offer and how we can help you navigate the investment space, as it were. And then maybe as a follow-up email to some of us that attended, and we would also put in, like I said earlier, our emails, and you can always reach out to us. So, but from all of us at United Capital, Abidin, Martha, and the team here, thank you so very much for attending, and do have an excellent Saturday, week, month, year ahead. Have a nice time, and please reach out to us if you have further clarifications. Thank you so much for attending the session. Bye for now.
Thank you.
Thank you, Louis. Bye.
Bye, everyone.